just talk about 2 or 3 of the things that might make a difference. And they're all in the completely unthinkable bucket. Right? So let's recognize that these are unthinkable thoughts that rooms like this ought to think about. Right? Because if we don't think about this stuff, because everyone here actually cares about this stuff. The other 99.9% of people, frankly, marginally care or don't care. Right? But we need to go into much more of the unthinkable space, because we're not going to get there by another complex blended finance structure, one at a time. Right? We'll get somewhere, and it's really good stuff, but it's not going to bend the curve, given what we've locked in. So things that we could do, we all know that it starts with policy. Right? Let's not kid ourselves. The banking financial system responds on the whole. It doesn't lead. Right? It responds to market signals and prices and reevaluation of risk and return, one hopes. But we will not get this right unless, as a community, we not only pay lip service to and say we should have a higher carbon price and other relevant externalities and fix these fossil fuel subsidies and all the rest of it, but we've got to start reflecting, even if governments don't do it all, some of this in the way in which we price risk, price assets, think about returns, decide what to invest in and what not to invest in. And if we continue going, well, actually, the policymakers are not going to do it, so we'll keep on investing because we can always somehow sell off the assets just in time, then we're part of the problem. So there's a huge piece about this that is getting behind policy and figuring out how to internalize it within our own organizations. How does that really look if we were to do that, even if governments won't go there? I do believe that we need to be pushing for a very fundamental shift in the role of the IMF. Right? I don't understand why we have Article 4 surveillance as an example, and it's only an example, which doesn't incorporate this conversation front and center. Right? The IMF is supposed to be looking after the stability of the global economy, and we are sitting here on an economy that has the seeds of unraveling growing up very, very powerfully within it. So we need to get institutions like the IMF, right, to play a very different role. The arguments for forms of quantitative easing that are tilted to what we will be in my best estimate is that we're going to be in a low interest rate environment for a very long time. There are very good reasons, deep, deep structural reasons for it. But if we keep on just providing the money neutrally across the system, it's going to keep on investing in the easy stuff, because that's what we do, because that's how everything is geared up. So we will have to find a way to shift forms of quantitative easing and the use of other monetary instruments into much, much more aggressive SDG/climate-related investing. I'm of the view that we should be shifting the model of capital adequacy. Right? I don't think we have got the right Basel III and in the insurance sector Solvency II type approach. Right? We've got to start penalizing institutions that are holding high carbon assets or other assets that very clearly, very simply contribute to the world that we don't want for our kids. Right? Why would we keep on, in effect, supporting a regulatory system that gears money in the wrong direction? That does not seem to me to be what any of us would deep down believe is the right thing to do with our own savings, let alone the savings for which we are fiduciaries. We have got to work with the asset owners in a very different way. Their mandates today are just typically, not in all cases, there are wonderful counterexamples. And we all know of the Scandinavian story or a little bit of the foundation world acting with their endowments in a way that is truly aligned with the world that their endowments are supposed to be supporting. But it's not all of the foundation world, and it's certainly not enough of the institutional owners who are creating where is the template new mandate that offers a very different set of incentives, a radically different set of incentives to the asset managers. Because the asset managers will do what they are told to do, right? They respond very rationally to incentives. We are desperately lacking some of the information that we need, right? And this idea that we're going to get there with voluntary disclosure is honestly for the birds. It might have been fine if we'd started 20 years ago, but it has to be driven in a different way today. And I do agree with one of the other observations that was made, and that was really interesting coming from DFID in the UK, and that is that I do think that people want to know where their money is going and what it's being used for. And I think it should be a 100% absolute mandatory obligation on financial institutions and the pension fund managers and the like to help us all understand where our money is going. Because at the moment, I will put my hand up. I may be the only one in the room. I can't see anybody. I'm not going to ask you to do this. But I actually don't know where all my pension is invested, right? And I've tried, and it turns out to be quite hard to get the data you want, even if you push hard, and that needs to change dramatically. So I'm in the camp which is we absolutely need to do the billions to the trillions. We need to shift those trillions in the right direction, not in the, more of the same place. I think the financial system has an astonishing role to play. We will not get there without the financial system transforming itself as part of a deep fundamental shift that we need. But my acid test to you at the end of the day will be to prove to me that the financial system is going to be as responsive to the smallholder who needs to go from 2 tons to 8 tons per hectare, and that we'll find a way to do that, and we'll make that the source of the real, if you will, career paths, the aspirations, the big returns to people in the banking and financial system, and not the Aramcos of the world. Because until we change that, we don't get to where we need. Thank you all.